Hey y'all, how's everybody doing today? Angela Knight here, Coldwell Banker Realty. I have a guest with me today. He's here at my office, James Nobles. He's with Guild Mortgage. He's one of our local lenders here, one of my preferred lenders. And today we're going to be talking to him about the mortgage lending process. I have some questions I'm going to ask him, and he is going to give us some answers, maybe some facts, maybe some myths, some do's and don'ts. So we're just going to go ahead and get started. James, thank you for being here today. I appreciate your time.
Sure.
All right. And one of the questions I just can't wait to dive in here is, what are the interest rates right now? It's a lot of people are asking, what are the interest rates? So tell us a little bit about how the interest rates are going.
Well, that is the most asked question out there by far. And I think a lot of times the reason why people will ask that is because they really don't know what else they can ask. That's just kind of their intro into the process. So right now rates are trending in about the mid threes.
Mid threes.
Now, that being said though, it all depends on your personal finances as to where you want your personal rate to be.
Okay.
In other words, there are different loan programs where you can buy down the interest rate, which means that you pay an additional amount of money up front in exchange for a lower rate over time. Now, you wouldn't want to do that if you were purchasing a home that you're going to be in maybe 3 to 5 years, because it takes too long to recover that money. But if it's a home that you're going to be in for an extended period of time, it would make sense to pay an additional amount up front and get a lower interest rate.
So is that like a down payment? Like a bigger down payment?
Well, it's not related to the down payment.
Oh, okay.
It's called discount points.
Okay.
And you're actually paying, you could actually think of it as being prepaid interest. In other words, you're paying a lump sum up front in exchange for a lower rate over time.
Okay.
And it makes sense for some buyers and some it doesn't. So when someone asks me, what is the rate? It's kind of like asking you, hey, I want you to go out and find me a 2,000 square foot house.
Oh.
At that point, you have 1,000 questions, right?
Yes.
Yeah. Where do you want to be? How many bedrooms do you want? How many baths? What school district?
Yes.
A rate is the exact same thing. For me to just simply quote a rate, I call mortgage malpractice.
Oh, wow.
And the reason why I call it that is I'm trying to write a prescription and I don't even know what the diagnosis is yet.
Oh, I love it. James, that's awesome. Wow, I love that. Yeah, that's great. So the next question, how much money do I need to put down? That is one of the biggest questions besides rates that we get. How much money do I need to put down on this house? They find a house, they love it. The next question, how much do I put down? So tell us a little bit about how to answer that question.
Sure. Well, it all depends on the loan program again. There are some programs such as the USDA Rural Housing Loan Program, which is 100% financing.
Okay.
Then you have a conventional loan that you could put 3% down. Then you have an FHA loan, which would be 3.5% down.
Okay.
And there are some conventional loans that require 5% down.
Wow.
Now, you always hear that term, or you always hear the amount 20% out there.
Yes.
That's typically for someone who is very mortgage insurance sensitive. And what I mean by that is if you're not putting down 20% on a conventional loan, mortgage insurance is assessed in your monthly payment. And think of mortgage insurance just like any other insurance, where you're not putting down 20%. So therefore, everyone who's putting down less than 20% contributes money into this pool, a pool of money, and that's how lenders self-insure against loan losses.
Okay.
So with 20% down, statistically speaking, someone is far less to default on the loan when they have 20% in the purchase than someone who has 0 down in the purchase. So it just is a way to manage risk or to manage the process.
Okay, so what about VA? I know that there's no money down.
Exactly.
So can you explain a little bit of that? Because a lot of people get confused on like closing cost and then no money down. So sometimes we have to explain the difference between the two because there is a difference.
Right.
And then USDA is no money down.
Correct.
So can you go into a little bit about that and how that works?
I can. Yeah, there are different sets of costs whenever you purchase the home. If there is a down payment requirement, that is in itself a separate set of money or a separate bucket of money.
Okay.
There are always closing costs, which are the appraisal, the attorney's fees, the processing costs. Those are just the costs that are needed to get you to the loan table.
And the buyer will need that at closing, right? They will need to have
Yes.
that money.
Either that or the seller can pay
Okay.
some or all of the closing costs.
Okay.
And then you have a third bucket of money, which is called the prepaids.
Okay.
And that is the first year of homeowner's insurance. And that's just paid at closing. And then the amounts that are collected to start both taxes and insurance if they're escrowing their homeowner's insurance and taxes.
Okay.
So you have those three different buckets.
Okay.
So if you have a VA borrower
Mm-hmm.
and they know that they don't have to put any money down,
Mm-hmm.
sometimes they'll make the assumption that they don't need any money
Right.
at all.
Yes.
But you have to take into consideration the closing costs and prepaids and who's going to pay those.
Right.
In some cases, the seller will pay some or all of that. So the veteran could get into the home with no money.
The money down.
But it all depends on how much the seller's willing to pay.
Negotiating process there.
Mhm.
All right.
That's where you come in.
That's exactly where I come in. All right, let's talk about credit scores. So
Okay.
another question that a lot of clients and customers ask is checking their credit. They're afraid that it's going to hurt their credit score, a hard pull, a soft pull. So tell us a little bit about that. Does it hurt their credit when you pull their credit and their credit score?
That is a myth.
It's a myth. Okay. Let's talk a little bit about
Okay.
that.
Mortgage credit inquiries are a little bit different from if you're going out and shopping for a car.
Okay.
Let's say you went to 2 or 3 different car dealerships
Mhm.
and then they ship it out to 2 or 3 different finance companies. And by the end of the day, you have 15 inquiries on your credit
Yes.
report. Yes, that's going to have an effect on your credit score. The reason for that is the credit bureaus aren't sure, did you buy 1 car? Did you buy 2 cars? They don't have a way of knowing. So it can temporarily affect your credit score simply because that amount of inquiries is unknown as to how much debt that will add to what you're doing.
Okay.
Now, with mortgages,
Mm-hmm.
if you have mortgage inquiries that are within the same 30-day time period, then all of those inquiries will only count as one inquiry on your score.
Okay.
They'll still show up on the credit report as individual inquiries.
Okay.
Like if they went to a bank, it would show that bank's inquiry. Then if they came to us, it would show Guild. But as far as the scoring piece, it only counts as one inquiry.
And not
for
multiple,
scoring.
like if you were to
Correct.
go in the,
That's
okay.
right. Yeah.
Wow. All right, very good. Well, let's talk about the difference between pre-qualification letter
Mhm.
and pre-approval letter. So sometimes I talk to clients, they have pre-approvals, they have pre-qualifications. What is the difference between the two?
It's really a judgment call on the lender as to which one they feel comfortable offering.
Okay.
Let's say that, well, first of all, let's define them. A pre-qualification means that I have a credit report.
Okay.
The borrower has told me how much they make,
Mm-hmm.
how much they have in their bank accounts,
Okay.
and I can see what their debts are on the credit report.
Mm-hmm.
And I make a judgment that they can qualify for the home based on the information that they provided.
Okay, now what is that again?
That's a pre-qualification.
pre-qualification. Okay, now
Yes.
pre-approval.
Pre-approval means that they've actually provided me a copy of their W-2s, pay stubs, bank statements, and I've reviewed and been able to validate the information that they provided.
Okay.
And then the pre-approval has a little bit different language. It says we have reviewed your documents.
That's the one we really would like to have, but
Ideal.
ideally we would like to
yeah.
have a pre-approval.
Yeah.
But we can still write offers on pre-quals based on the information the buyer has given you up front.
Yeah.
Okay.
Now, this is where the lender comes in. Let's say that I have a borrower that is a salaried person with the state.
Okay.
They tell me how much they make.
Mm-hmm.
That's probably gonna be right.
Yeah.
You know?
Yeah.
If it's somebody that's self-employed
Mm-hmm.
and they provide me a figure of what their income is, sometimes I'm not sure if that's the gross amount that they made throughout the year,
Yeah.
and then they still haven't subtracted out their
Their net.
expenses and what their net taxable income is.
Mm.
So in a case like that, I would always want to get the information to make sure that what I have is
Okay.
correct.
Yeah. before providing a letter.
Right.
Yeah. All right. Before we spend the time going out looking for houses, we want to
Exactly.
make sure they're qualified.
That's
Yeah.
right.
All right. A lot of people are furloughed now. Some are unemployed.
Yep.
Can we buy a house if we're unemployed now? Tell us a little bit about how that works.
I'm going to say yes and no.
Okay. Yes and
Okay.
no. All right.
All right. Let's say that someone is furloughed.
Okay.
They have a letter from their employer stating that they're going back on June 1st.
Okay.
If there are no conditions associated with that letter, in
Mhm.
other words, it's
solid.
it's
They're
solid.
going back to work.
Yes, then we can use that income for qualifying.
Mhm.
If it's still up in the air
Mhm.
and the employer cannot make a promise as to when that person is going back to work, we're not able to use that income.
Mhm.
However, if there's other income that's being used to qualify,
Okay.
the other person may be able to qualify to make the loan work. In some cases, we've actually had non-occupant co-borrowers. In other words, we had someone who has been furloughed, however, their parent was willing to co-sign.
Oh,
And
okay.
with certain types of loans, you lump all the income together, all the debts together, and qualify that way.
Is that the same thing as a monetary gift, or is this something totally different?
It's something totally different.
Okay,
That's
okay.
where that non-occupying co-borrower, they're not going to occupy the home,
Oh, but
but they're
given.
responsible for the debt, just
Oh,
like
I
the borrower
see.
is.
Okay, co-signing.
Mm-hmm. Yeah.
Oh, okay.
We can qualify someone based on that income.
Okay. Wow. Very good.
Mhm.
Very good. The next question we're going to get into is, once we get the contract written, everybody's agreed on it.
Mm-hmm.
Now we've got to come up with a date. How long does it take to close? That's one of the biggest things after we write a contract. How do we know, how far in advance do we put on that contract as far as dates? 30 days, 45 days, 60
Mhm.
days. And I know it may depend on the loan type, but tell us a little bit about that. How long is it going to take someone to get into a house, essentially?
Okay. I would say, as a general rule of thumb, you could say between 30 to 45 days.
Okay.
But each scenario is different. And I think you know
Yes.
that sometimes when there are conditions with the home, let's say that there are repairs that have to be done,
Okay.
or there are multiple sellers and the sellers live in different states, and
Okay.
it's going to take a while to get all of that
Get it
information
together.
put together.
Mhm.
That can have a variable on when the loan will close.
Mhm.
Now, there are different types of loan programs that typically take a little bit longer. For example, the USDA loan.
Okay.
That loan process is actually a two-tiered process. We approve the loan, and then once we approve it, we have to upload it to the USDA Mortgage Center.
Okay.
And they basically do an audit of the loan just to make sure that all of the information meets all of their criteria.
Okay.
That can add anywhere from 3 to 5 business days to the process.
Okay.
So whenever we're doing a USDA loan, we always like to set the expectation that it could take a little bit longer.
Mhm.
And if it doesn't, we can always move the closing date up. But I think it's better to come out of the gate
Mhm.
saying that it could take
So
a little
USDA is a government loan, right? Or
It is.
that's what we call a government loan.
Mhm, yeah.
And I know Kershaw County, the county I live in, Kershaw County, is USDA qualified,
Yes.
right? Is there any other counties that you know of? Is a little bit of Richland, I think, maybe
A
a
little bit
portion
of
of it?
Richland, a lot of Lexington,
Okay,
especially going out toward Gilbert.
okay.
Batesburg,
Some of the rural
Batesville.
areas
Mhm.
mainly. Okay.
A lot of people don't realize that some of the Blythewood area is
Oh.
USDA eligible.
Wow,
Just depends on where it is.
yeah.
You could literally have a house across the street that's eligible from one that's not.
Mhm.
So anytime you have someone who's interested in a USDA loan, we need to plug in that specific address on the USDA system to see if it qualifies or
Yeah,
not.
good deal, good stuff. All right, so someone calls you up, they're ready to buy a house.
Mhm.
They're not quite sure what to do. Let's talk a little bit about someone calls, they want to buy a house.
Mhm.
What do you tell them? What are their first steps? What are some do's and don'ts about the home buying process? And we'll end it at this. This will be the last question. So tell us a little bit about that.
All right. The first part of the conversation is really a consultation,
Mm-hmm.
because a mortgage is a financial plan. It's not just something that you try to choose the lowest interest rate, you try to choose the lowest costs, because that doesn't always give you what you need in the long run.
Mm-hmm.
So we start out asking all of the questions about where is the price range that you feel like you need to be in order to buy what you want to buy? And where does that match up in terms of your monthly payment? A lot of times it doesn't matter what I can qualify someone for. In other words, let's say that you have a young couple, no children, they both have very good professional jobs. I may be able to qualify them for $2,000 a month for a mortgage payment.
Okay.
But their expectation is to be around $1,200.
Okay.
So it doesn't matter that I can qualify them for $2,000 a month. So I need to find out up front what they're comfortable with, where they want to be, and then match that up with the purchase price range, and then of course the program, depending on whether they want to put money down or not.
Okay.
So we start out with that part of the process. Now, once they're in the loan process, we always ask them to consult with me or the processor before they do anything that has to do with money or make a financial change.
Okay.
Don't go out and buy a new car.
Did you hear that, guys? Don't go buy a new car.
Don't move money around in your bank accounts
because
we have to verify the source of where the funds are coming from for the closing.
Okay.
So if you have 2 or 3 different accounts and you're moving money all over the place, we have to source where that money's coming from. So then you just have to provide more documentation that you really need to.
All right. What else?
So that's really about it.
Really?
We
right.
just kind of walk
Don't buy a
you through
car
that.
and don't move your money around.
Don't change your debt.
And don't change your debt.
Yeah. Is really what it comes down to.
Okay. Anything else after that you need to do as far as getting the pre-qual or pre-approval? Just what's the next step after that? Is that it? I mean, once they've given you all their information, you're ready to go?
Kind of.
Yeah.
Once they're under contract and we get the loan in process, I do like for everyone to know that we do updates all of the time.
Okay.
I do Tuesday updates. I'm sure you've gotten those before.
Yes.
Where we call and say, okay, here's where we are in the process. Here's where we should be by next week. And that way everyone has the expectation of how well the loan is going. We always want to make sure that we do as much due diligence up front as we can. In other words, we don't want to submit a loan, but we don't have their pay stubs yet. That's kind of silly.
Get your documents to the lender
get all
ASAP.
Your documents in ASAP so we can make sure that we have everything that we need on the front end to mitigate whatever the surprises would be on the
And sometimes that will move the closing back too. If the buyer hasn't turned in some paperwork or their pay stubs, that can push us out even farther and having to move the date around for closing. Yeah.
And we always want it to be a very seamless process, but I think you've been doing this long enough to know that there are there are bananas that get thrown in front of you to slip you up along the way. So we have to anticipate that those are going to happen.
Wow, good stuff. James, thank you so much.
Absolutely.
James Nobles.
Thanks for inviting me.
He is with Guild Mortgage. James, give your number out so people want to call you up. What's the best number they can reach you?
My cell phone is the best way. It is 803-309-8684. And don't forget the 803 now that the area codes have changed in the Midlands. So
good deal. James, I appreciate it again.
Sure, absolutely. Thank you.
All right, guys, hopefully this was helpful for you. Linden Mortgage, FAQs. Angela Knight here, Coldwell Banker Realty. I appreciate you guys listening in. Just remember to be grateful, be thankful, be kind, and I'll see you on the next one.